This is Back Roads of Illinois server to farmers and ranchers in central Illinois in the Midwest. I am Cesar Delgado. The Midwest is preparing for the planting season begins in the Missippie River with the fertilizer space for this spring. He is joining with me is Mike Stephoek from Soy Transportation Coalition and Grains and What's New with the livestock markets for this week. Now he's joining with me. It's Jonh Heinberg from TotalFarmMarketing.com. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest. The Midwest is preparing for the planting season begins in the Missippie River with the fertilizer space for this spring. He is joining with me is Mike Stephoek from Soy Transportation Coalition. Hi, Mike. I'm glad to have you on today, and how are you?
Doing fine, Cesar. It's always good to visit with you.
And how is the cold weather?
Yeah, I mean, fortunately, it's also we're seeing temperatures increase. Well, from what we've been experiencing the last weeks. But that we've experienced not only but throughout much of the country is a reminder of how severe winter weather have a detrimental impact on the supply chain. And we experience winter every year throughout the Midwest, and so this is not anything new. But I would say that the severe winter weather we've recently experienced has been a bit unique in the sense that we've had a really significant area of the country having to wrestle with this. It's not just limited to one particular area. We've had a lot of areas of the country that have had significant snowfall and ice in areas that they typically do not receive much, if any, snowfall or ice accumulation. And then also, in addition to that, a lot of areas of the country, even if they did not receive snow or ice, had, severe frigid temperatures. And all of those things can really conspire to limit the efficiency of the supply chain, whether it's truck, whether it's rail, whether it's barge, for a variety of reasons. And so, not surprisingly, we've seen our transportation infrastructure not as efficient these last couple of weeks as it normally would be. And the severe winter is certainly a reason for that.
Yes, with the snow because it could make big impact on the flooding in the river.
Yeah, it certainly can. So when you have ice accumulation and you've got severe frigid temperatures, when you think about barge transportation, obviously those workers who, whether you're working on the barge or whether you're working on the shoreline helping load barges, that's going to limit the amount of time you're able to spend outside. So that alone is going to inhibit the efficiency of barge transportation. But when you think even more things like with ice accumulation on the river, whether it's due to precipitation and then obviously cold temperatures, ice will start to form from the shoreline and move more and more closer to the central part of the river where the shipping channel is. And so all of a sudden you are limiting the number of barges that you can attach together to form one single unit because of that ice accumulation. And then also with ice accumulating on the river, that will restrict the flow of the shipping channel of the river itself. And so there can be restrictions imposed on that as well. So it really is just, again, this is not something that is new for us in the Midwest. We experience harsh winter conditions every year, but it was the fact that it was quite widespread and uncharacteristically severe is, one of the reasons why we've seen such an impact on our supply chain, including barge transportation.
We can have ice jams.
Most certainly, that's another thing, and you have to kind of worry if you all of a sudden have too rapid of a temperature increase. All of a sudden you can still have these big chunks of ice that haven't fully melted, but you've got the rest of the river has melted. So you can have these ice jams, and you can have these buildups of water that can help increase flooding in that immediate vicinity. It certainly can have an impact on the dams itself, having these big chunks of ice that reach these dams, and so it's something that something to definitely monitor as we move forward.
Of course, Pam. How is the grazing condition? Of course, Pam. Mike, let's talk about the U.S. soybeans industry. It's thin under the line of trade barriers for right now. Otherwise, what's your thoughts with today's trade barriers with China? But it's not completely satisfied for right now. How concerned about the Missippie River in New Orleans?
Yeah, so we're obviously pleased that recently we were able to have some additional exports to China, reaching that 12 million metric ton figure. That was welcome news. The president recently had a visit with President Xi Jinping from China, in which, at least from President Trump, announced that there will be an additional 8 million metric tons, so bringing it a total of 20 million. Where we would certainly like to see the Chinese verify that to make sure that everyone's on the same page. But any additional exports to China would be very helpful to us. Exports to any country in the world, but to keep that into context, so the 12 million that we have recently achieved, normally we're exporting 26 to 30 million metric tons a year to China. So that 12 million is a pretty significant departure from what the norm actually is. And so we're obviously hopeful for any additional export sales that we can have to any countries in the world, and that certainly includes China. One of the areas of the country that is very essential for us being able to satisfy and fulfill any kind of export demand is the Mississippi Gulf region, and that's near New Orleans. And not only for sending product to Asia, but then to Europe, North Africa, to Latin America. There's a lot of areas in the world that we export to from those facilities, those terminals located on the lower Missippie River. And unfortunately, we've been wrestling this year with a lot of low water conditions, which does have inhibit our ability to export as efficiently as we normally would. So that's something that continues to be an area of concern for us, and something that we're continuing to monitor.
How about the port of New Orleans? What is their impact on the trade woes?
Yeah, I mean, you see, again, the export region, that we think of the lower Mississippi River near New Orleans, the Mississippi Gulf region is kind of how I describe it. That normally accounts for 55%, upwards of 61, 62% of our total exports for the soybean industry leave from those facilities along the lower part of the river. So when you've had a reduction in overall exports, that area is going to be adversely affected. I would say when you think about the Pacific Northwest, that's our number 2 export region. 25% of our exports typically leave from the Pacific Northwest. That's a very important region for us. that area is even more tied to exports to Asia. It makes sense because we're exporting off our west coast, and so the Asian market is very accessible to the Pacific Northwest. And so when you see this decline in exports to China, those export facilities in the Pacific Northwest are very much going to be exported, but it doesn't. It certainly extends to other export regions, and that includes the Mississippi Gulf.
We talked about the biofuel demand for soybean. Do you have any thoughts about it, Mike?
Well, it's one of those areas that it's especially with the the softening of demand for on the export front. Um, Biofuels is one of those opportunities to really be a bright spot for the soybean industry, and so there's been some very favorable decisions made in Washington D.C. related to biofuels. There are some additional ones that that the industry is really looking for. Um, but it's one of those just certainly significant opportunities that if international demand has relaxed a bit, all the more reason to really pursue domestic demand, domestic markets, and biofuels is a great example of that. And so that's something that it's a significant priority among all of these soybean farmer organizations is really pursuing favorable decisions and the real lucrative opportunities within the biofuel space moving forward.
You have some final thoughts about this crop as the beans.
Yeah, I mean, there's challenges, but there's also opportunities. And so, what we're really focused on doing is really finding those opportunities for to really help the profitability of farmers moving forward. And so that's why we exist. That's why some of these other farmer organizations exist, and we're certainly going to just continue to be focused on that.
Thanks, Mike, and I enjoyed our conversation.
Well, it's always good to visit with you, Caesar. Thanks for having me on your show.
This is Mike Steenhoek. And what's new with the livestock markets for this week? No, he's joining with me. It's Jonh Heinberg from TotalFarmMarketing.com. Hey, John, how are you?
Doing well. I am doing well on a busy market week.
John, let's start with our conversation about the grains markets, especially in uncertainty within the world. What does farmers are finding some concerns in the corn markets for right now?
Yeah, let's just go ahead and touch on that corn market. Now, good day today. Kind of followed suit a little bit here with the soybean market, wheat market. Kind of pushed ourselves to realistically some of the higher prices we've obviously seen since the report, new high for the move here today. So maybe providing some opportunities for some producers to get some selling in here that have been patient. We're still in a seasonal window where first notice day is coming. March basis contracts have a tendency to drag this market. There's a lot of supply still out there. Those are just natural limiting factors in the marketplace. A lot of producers I talked to today were moving some more bushels, so maybe that's some of the reason we kind of stalled out around that 435 in the March contract today. So the seasonal side of things is a bit concerning right now. Plus, also, we're going to get the Ag Outlook form here relatively soon. That's going to be around the 19th, 20th of February. Then we're going to see baseline projections. And in the past, those numbers really didn't mean a whole lot. But now with the modern markets, we trade those as well. And you're expecting to see a acre number 94 95 million possibly, trend line yield around 183. Again, assuming normal weather, that's just going to be a big pile of corn on top of a big pile of corn that's currently out there. So that last year we actually peaked on the day of that outlook for them, and then we proceeded to lose about 70 cents on the March contract in through the first notice day window into a early March low. So I'm a little cautious of that. The average move from February high to March low has been at 63 cents the last 4 years. So those are a couple things here with this type of price move today. Do we, if you want to hold those bushels, put a little floor under them, protect you through the spring? Do you start targeting a few new crop ideas as well at 460 on the December contract? There's some opportunities out there right now because you got to assume normal weather until proven otherwise, as in this corn market at this time frame.
What is your position on the February world supply and demand report on Tuesday? Do you think that it's neutral report on Tuesday?
I apologize there. Going into that report, a lot just going to depend where prices are staying. Okay, a lot of that reports put together. I don't see a whole lot of changes coming in that regard. It's just a little too early to maybe move some things around. We've actually seen corn demand slow down here. We are still seeing good sales. This week's sales were, bottom end of the expectation range, was still a strong week for this time of year, but the pace has slowed down. Actually, if you look at today's numbers, we're about 42% behind the 4-week average. Now, some of that's like kind of extended because of the jump in sales we had the week of the USDA report when prices fell. But at the same time, it's just a trend we've been seeing here that, the sale pace is slowing as we get closer and closer to South American supplies, maybe getting into the marketplace, even though corn is still, the market that we control at this time frame. So with that report, I don't expect a whole lot of changes. February is usually a kind of a quieter report line item. If anything, maybe some marginal changes. March may be the bigger month that we see some more movement if they're going to add some more to corn export demand, watching what they do with feed usage, those things. Over on the soybean side of the equation, obviously you got the True Social post by Mr. President Trump yesterday about the possibility of another 8 million metric tons maybe bought in this window here. At this time frame, the fundamentals aren't there for it. I mean, U.S. beans are still trading well above Brazilian beans in terms of price, but again, in the world of trade, the trillions of dollars we spend with China on trade of, a few million metric tons of soybeans is a pretty small drop in the bucket dollar-wise. So we'll have to see if anything materializes out of that. I would say at this time frame, we're probably not going to see a whole lot maybe happen on the bean side, especially with this type of an announcement that's out there. The thought was maybe that bean export sale number does still come down a little bit going into that Feb report. But right now, I think given price moves, if we're still at the top end of things going into that report next week, I'll probably look at being a little bit defensive in terms of put strategies, things along those lines, just to protect the value that we've gained here over the last few weeks.
Yes. But right after the math on January, right, it will be quiet time for this report.
It's a USDA report, and anytime we get those, there's always a chance of something being offline or being out of unexpected happening. So as we've seen that over history. So, the biggest thing is how does the market handle the numbers? They're still going to be big in corn. They're still going to be concerning in beans regarding the export side. So realistically, I think the market might stay a little bit of wait and see. Like I said, we've seen some really good money flow this week. Getting ready into that report wouldn't surprise me. You just see some money flow going back down out of it if the numbers stay kind of where they are, as the market just maybe has put a little bit of energy in. So again, like I said, going to go into it a little bit defensive. And, if we're wrong, producers got plenty of bushels to the upside that can gain value. But let's make sure we're protecting something with some short-term puts underneath the floor with not much cost.
Of course. What is your position on the cattle markets? Do we need a floor plan anymore?
I think we constantly need a floor plan in cattle markets. We're trading at, near those all-time highs. Difficult day today, so we saw some profit taking. Obviously, there's a few headlines out there. The horse imported from Argentina was screwworm. Maybe that's what's shook the feeder market a little bit today, even though the feeder index is still trending higher today. Now we got a pretty big discounts of futures to that feeder cash index. So I still like this feeder market going forward. Add in there the vote by the Greeley plant in Colorado that's run by JBS of a potential strike coming. Does that shut that plant down? Does that get averted? I think that came into play today. Some softness yesterday on the retail side too may have also helped on the strong selling to start the session today. Now, focus shifts to cash trade. We've seen this the last few weeks where we sell off Thursday, early Friday, cash trade develops, and then we trend the week higher as we go. But a little bit of different action with the way things are pricing so far this week. So we'll have to see what's happening with cash trade. Forecast, at least from talking to producers, what they're seeing for bids, steady, slightly higher maybe out there. If that's the case, this market's undervalued again. The last little piece that's coming into play, February options also expire tomorrow for live cattle, and that sometimes can bring just a lot of volatility and money flow into the marketplace as the market positions for those options to expire.
What about LRP, John?
Again, those flooring plans are still key here, whether using LRP, put strategies. Again, just make sure you're evaluating costs versus protection. In those regards, you still got a market that looks like it wants to trend higher. Cattle inventory numbers were actually friendly. We aren't seeing any growth in the cattle herd yet in terms of the cow herd, in that regard. So with that, again, you still see, just like today, quick $6 down on the April contract. Having some floors in place is still a very big key, especially as we move into the spring months. Typically, we do get some peak around here. We get some pullback until we get to that grilling demand window. Still not thinking that's it at this time frame. We got to see where this cash market wants to go. I could see some movement maybe into the low 240s here as we get into the end of February into March.
How about the lean hogs markets today, John?
Yeah, kind of watching that market, and we've had a really nice run. Now, it feels like we're getting a little bit tired in the lean hog market. We just can't seem to be holding on to some of those gains here, especially those summer months. We did trade June up to around the 112 level, then kind of fell back a little bit today. We just couldn't really seem to be getting footing, even though we did climb off some early session lows. So it looks like a market that maybe is going to get itself a little bit tired and a little bit sideways here. But still the fundamentals are there. Cash index is still trading firmer today, but is still trading underneath that February contract with expiration on the 14th coming up very, very soon. But again, we'll have to just kind of watch where it's at. But it has been a nice move. Realistically, you're talking pretty much a climb higher since the November lows. Might be just time for this market to take a little bit of a breath here, especially with the price action we've seen, the last couple of days.
What is your final thoughts about the corn demand for export?
Again, it still comes down to price overall, where we compete on the global scale. Right now, we're still a very good bid out there. We have watched some bids from Argentina show up that is cheaper than U.S. corn at this time frame, just to kind of get into the March window. But then after that, that bid goes away. So that's going to be the biggest piece of this puzzle, is going to be where do we compare on the global scale. We still have the most corn available out there, and that's going to keep things moving. But again, it's just going to cautious that that export demand could start slowing here, especially as we get closer and closer to Argentina harvest, and then the key second crop Brazil corn harvest. Obviously, the biggest thing that's still a factor in all these markets is the weather and what that can do globally in terms of impacting the available supply that's out there.
Thanks, John. It's a lot of uncertainty within the grains markets. Everybody is working with the agricultural industry.
Uncertainty brings volatility, so that keeps things active in the marketplace. Thanks for your time today. Look forward to talking with you soon.
This is Jonh Heinberg from Total Farm Marketing. This is Back Roads of Illinois server to farmers and ranchers in central Illinois and the Midwest.